You're green on the quick scalp, but should you hold for the bigger move? What's going on, guys? It's Christian from Stock Hours. So today I want to talk about certain things I look for when I'm taking a quick scalp and taking profits quickly versus holding for a potentially bigger move in the stock. So obviously by default I'm a scalper, so usually I'm not in for too long, but there are certain occasions where a play might be setting up to where I should be holding it longer. So here are certain things that I'm looking for in scenarios like that. I'll share my screen so you guys can kind of see what I'm talking about. One second. Cool. So one of the first things that helps me determine whether I want to sell quickly or hold for a little bit longer is going to be the bigger time frame. So right now I'm looking at a 4 hour chart, so that's a bigger time frame than, for example, the 15 minute or the 5 minute or the 1 minute. So you can see how we were setting up at 500 down here. Plus we had like a 4 hour downtrend. So there's multiple things telling us that the 500 break could potentially be a bigger breakout than just your typical smaller time frame breakout. So, trades during like times like this or whatever, you might only be looking for a $1 or $2 move on the stock. But when you look at a bigger time frame setup like this, and also 500 is getting close to the all-time high area, so that's even more reason why 500 is going to be an important level. Um, so seeing that we're breaking 500 might give you reason to hold for longer than you normally would, as long as there's things working out for you. So, like I said, the very first thing that I'm looking for is what time frame is the setup presenting itself at. So, for example, this one you can be looking at the 4 hour, maybe even the 1 hour. Yeah, so it's still a good setup on the 1 hour. So you see those multiple tests there. Obviously, we broke out, so forget about that. But seeing that we're setting up right at 500 is going to tell me personally that we have a big wall sitting at 500. So these days when we had these rejections, I took this trade because everything looked good. But since the wall was so big at 500, it takes a lot for it to break. So now when it does break, there might be a good move following after that. So that's one thing that you should be looking for is what time frame the setup is presenting itself at, and if there's multiple things lining up for it. So here you have a 1 hour downtrend right before 500. We also had a 4 hour downtrend right around that area. So you have a lot lining up telling you the 500 area is going to be a big level. So the next thing I look at on bigger time frames, since this is a bigger time frame setup, is where does the trade have room to? So there's multiple things I was looking for here. The first area I'm looking at is going to be, about this area. So like 502 to 504, since that's where we previously rejected off of. The next area is just going to be the high over here at about, what was this, 509 or 510, depending on how you look at it. And then obviously the biggest level is going to be this 520, which was the previous all-time high. But this was also a pre-market level, so that's something to keep in mind. This isn't during trading hours. This was an earnings pump, so it was after market, and then obviously we never traded during that time, during market hours. So if I go to the daily, you can see that that 520 level technically was never even touched. And then the daily high was 505. So that's something to keep in mind, whether these key levels were hit during the market or after market. It'll give you different areas to look for a profit target. So like I said, on this level, when 500 breaks, the first area I was looking for was like 502 to 504, somewhere in there. And then the next one, if you look at the daily, 505, but then after that 509, and then you have a lot of room up after that. So um, another thing on the bigger time frame, you can see how this area kind of reacts versus we have no price action up here. So what that shows me is that this can be a cleaner breakout than if we're trading a breakout somewhere in this area, just because it's chop. Usually it's not going to have the biggest moves or the cleanest move if it's gonna be a big move, versus if you're trading a breakout here, technically there's not much resistance holding it back. So as long as there's good volume and if the market's moving in your favor, then these trades, when there's no resistance, should have good continuation. So let's go to the 1 minute. I'll just show you kind of how it did play out. But this level, we were looking at it for like a couple weeks, I think. But you can see on the 1 minute, we did come test 500, pull back, and then look at when it retests it. We have a lot of volume, and then after we break, there's no real significant red candle. This is honestly a very small red candle relative to the push up, but we pushed all the way up to what, 512.50, and then consolidated for a little bit. So most of those profit targets hit in this first move, and eventually I think the 520 level did hit this day, but that would have been a very, very long hold. Yeah, 520 did hit that day, but obviously that was way later. In the very first move, you would have hit most of your targets if you were holding, and had you had a trailing stop or whatever, this honestly would not have been too difficult of a hold, considering that there was no actual pullbacks anywhere in this area. So that's something to look at if you're scalping versus holding for a longer trade, is what is the price action looking like during the trade. So obviously once we broke 500, this huge key level on the bigger time frame, there was a lot of continuation, and this is very clean price action if you're looking for upside. Of course, there's no real pullbacks. All of these candles look pretty healthy. This one has a little bit of wicking to the upside, but other than that, this is all pretty clean. So that would make a hold like this relatively easy. What I do personally, if I am looking for a bigger move, I might scale out at different price targets. So for example, I said 502 to 504. That would be a good area to scale out, and then potentially hold the rest for a bigger move to this 509, and that would have paid very well had you done that. So another thing when you're looking at the bigger time frame is how extended is it getting into this 500 level. So you can see we're not really too extended into 500. We are strong, which is good, but it's not like we pushed up $100 when we first reached this 500. So that's good. That shows that when we break, it still has room to potentially continue farther. And since we broke this big key level, that could show that buyers are aggressive and then finally ready to let the big move happen at this area. So how extended is it on the bigger time frame? And then also another thing, when you come to the smaller time frame, same thing, how extended is the trade into your level? So when you come here, the first test, I wouldn't even say it's like extended, but obviously the second test, it had pulled back. This you could even consider a bull flag, and then it obviously had its move up after that. So here, specifically, it's very good because it's not extended at all. It had pulled back a little bit, consolidated, whatever you'd want to call it. So that gives it room for when it breaks to have a bigger move. Obviously a $10 move, or $12 actually, that's a pretty big move. At that point, it's definitely extended, so I wouldn't be getting in up here. But if you were in here, on Nvidia, for me especially, anything after like $5 to $7, I would call it extended. I would wait for a pullback. But if you're already in, then you would just wait for a red flag to tell you to get out. So this might be a red flag here, seeing how we wick. But before the trade, obviously there's a small pullback and then big volume pushing us through 500. So this could be a sign telling you that this trade might have room to run, since we kind of pulled back a little bit and then broke. Versus if we just had a straight push off open, you might want to get out sooner, just because a pullback might just be waiting to happen somewhere in this area. But the pullback obviously happened at a perfect time, so that is a good sign for a trade like this. So let me just go over real quick. The first thing I look for is this a bigger time frame key level, or is it a smaller time frame key level? And with that, the area that you're breaking out of, is it breaking into a clean resistance free area, or is it breaking into a previously choppy area? I'll show you an example of kind of what I mean by that. Let's go to the 4 hour here. So you can see Tesla here, very choppy in this area from 246 to like 230, 231, whatever you want to call it. So when we break out of here, yes, it could be a good trade. However, you're trading into previous resistance, so that's something to keep in mind when you're trading this. So the bigger time frame technically isn't showing you it has a lot of room before the next resistance. So it is just something to keep in mind. Doesn't necessarily mean it's a bad trade. It's just you have to be, conscious of the fact that you could have a slower move versus how I showed you on the video. It was just a clean move with not much resistance stopping it. So trading at the chop versus clean breakouts, and then also seeing what it has room to as the next support or resistance is going to help you determine whether you want to just take the quick scalp breakout. So let's say if it broke 500, just sell when it breaks, versus let me hold to 504 or 509 or something like that. And then obviously the other thing was how extended is it on the bigger time frame and the smaller time frame. And then the very last thing is going to be market sentiment or correlation, whatever you want to call it. So is the market moving with you or against you? I can try to show you how the market was moving at the time. Just give me 1 second. So this was okay. The 8th. All right, so the first test was at 934. So yeah, you can see the market is also pushing up. So that's another thing telling you that the trade is more likely to be in your favor. Because when the overall market moves, there's a high likelihood that it will move your stock with it. Now, on the flip side, there are occasions where, let's say, your stock is weak while the market is pushing up. That could still be a good trade. The only thing I would say is that you need the confirmation that the market is going to start moving down. Because let's say your stock is weak while the market's moving up. If the market pulls back or it starts breaking down, then your stock technically should be one of the first to have a downside move or have an aggressive downside move. So that's another thing to pay attention to, is how the market is moving with your trade, whether it's supporting you or if your stock is showing significant strength or weakness with the market, to kind of use that as a additional confirmation that your trade has room. But that's pretty much what I look for when I'm determining when to take the quick breakout versus hold for a longer period of time. Um, Something that helped me with this specifically was to scale out at different profit targets. So let's say, for example, on Nvidia, if my first target was 502 to 504, let's just say 502 for example. If I scaled out half here and then waited for the other half to, I don't know, break below 501 or hit the next target, um, which I think was 505, on the daily time frame was around 505, then I could have scaled out the rest there, or waited until price action showed me some type of red flag. So this right here would have probably been a red flag. Here, even though it is a red candle, it's not really a significant red candle at all. So even this isn't really, tough to hold through, especially if you're in at 500. So those are basically the things that I look for when I'm trying to see if I should hold for a bigger move or take the quick scalp. So let me know what you guys think about this. If you guys like to scalp or hold for bigger moves. Um, Sometimes if you're, just strictly a scalper, there are going to be the few occasions where it's worth holding longer, even though it's not what you're used to. It's something to practice. And then over time, you will get better at it. And certain trades like this, especially, are going to really add a whole bunch of extra padding to your account. So, if your normal risk to reward is like 1 to 1 or 2 to 1, this might give you a 6 to 1 potential. So that's why some trades are worth holding a little bit longer, and why it's worth determining if you should just take the quick scalp right away or take the chance and then hold a little bit longer. But now when I do hold longer, I still have a stop loss with that. So my stop loss isn't going to be what it was the first time around. If I'm up $5 on the stock, I'm going to um, change my stop loss along the way so that I'm not giving up all those profits. So that's another thing to keep in mind with holding for a bigger move. But that's pretty much it. Hopefully you guys liked the video. Make sure you leave a like and comment. And also, if you're not a part of Stock Hours, every Wednesday we have free access to the group. So if you're interested in watching us live trade every day, and we also have lessons, then make sure you join the free group. So see you guys later. Peace.